so much. Great to see you in large numbers once again, and it's a pleasure to be with the industry experts who has been leading their sector since really long time. I have been learning with them since I keep talking to a lot of them. When we were thinking about next gen as a theme, which I discussed some time back, there was a lot of resistance from a lot of people, whether the CFOs will speak on the next gen or not, because they're a hardcore balance sheet or the finance guys, and why will they talk about the technology? But then as the proliferation of digital is so much that I thought, let me take a bet, and fortunately got a great response here. So I'm going to shoot a first question, which is based on the topic itself in terms of how CFOs overview on how they are preparing for the next gen. And we'll start with that question. So ladies first, let me come to Upma, to you first, and tell us, how are you preparing for the next gen?
Thank you so much for having me in this panel. And the question is, how are we preparing ourselves for the next gen? A lot to do, and we're doing many things, but are they sufficient? Answer is no. It's a lifelong learning, and we'll continue to learn. Preparing ourselves for the next gen is, one important thing is embrace the technology. While we call ourselves as a CFOs or the very hardcore onto the financial numbers, financial acumen, that something is become like a hygiene. And now we need to prepare ourselves what's happening onto the technology side and how we are embracing. So we need to be the transformational leaders, not only in our area, but across all the areas which is touching upon our balance sheet. That's something is what I personally feel is the preparedness towards the next gen. Second thing is, while we'll say what about the skill sets, when we talk about we need to have the arsenal of skills, not only the finance and the technology, but also the entire gamut of businesses where we are working. So gone are the days when we expect that you're working as a stewardship role, but we need to be strategists. That means we need to aware of in which business, how the things are happening, what my competitors are doing, what are the regulations, how are we doing it onto the compliances, and where are we onto the risk. So touch upon anything, and we need to be prepared. And that's something AI is coming it as a strategic enabler for us. That's what I can say. Thank you.
Sure. Thanks for adding that, Upma. I think that was good to begin with. As she said, AI is coming. I think AI is the flavor of the season. I think in last 3-4 days, maybe election became the flavor of the season in Maharashtra, but otherwise, AI is the only flavor of the season. So Swayam, who's going to win the Maharashtra election? I was just asking about the Maharashtra election.
I'll check with ChatGPT.
Sure, good one. How are you preparing for next gen?
Yeah, I think it's a very relevant question, not only for us, but I think for all of you. If I put JSW a little bit in perspective, we are a very traditional manufacturing company. That's the trait we bring. We produce something which is foundation to, let's say, country's economy. And it is produced, it is manufactured in a very rudimentarily factory way, which also means that traditionally what we have been doing, we have significant dependence on people. So manpower used to be a core input to, for example, making steel. If I just break this question's answer into two parts, in terms of operation, producing steel, I see a very large changes happening, right from how we make steel. And today, for example, in our factories, we have over 200,000 sensors and IoTs, which did not exist 10 years back. Those sensors, for example, have ability to predict failures. Those sensors are allowing our operation to become safer. For example, if you go to blast furnace, there is hot metal, right? And historically, steel you have to go closer to monitor. Some of the new generation, tech which we see these days, completely takes that away. If you look at other part of operation, it is making us safer. It is, there are new technologies, for example, available, which is allowing us to produce more efficiently. I don't want to use a lot of technicality, but there is something called top gas recycling, which with AI, if it is done right, it will allow same traditional route blast furnace to produce 30% more metal. Will be far, far more sustainable because takes away need to use more coke or traditionally what we have been using. But if I come to finance, I think this is a topic which is closer to our heart. I've been witnessing very significant changes for last 10, 15 years. And I've been fortunate enough to have gotten exposed as a professional not only to traditional organization, great organization like JSW Steel, but also startups, MNCs, and I see how change adoption is, although different, but eminent for all of them. So if I look at finance today, in JSW Steel, the biggest and largest impact which I see is on performance management, FP&A, the way we are taking decisions, the way data gets analyzed, the way data gets presented, the kind of meaning you make out of it. If I see what it, how it used to be done 5 years back versus today, it's very different. If I look at, other parts of finance, I think, new gen is changing or touching us in more ways than we can imagine. Whether it's shared services where, you have ability to probably prevent a payment error, or, you are able to, do things faster. For example, all of you would know a GST return. Reconciliation used to be an exercise in itself. Today, we are able to do it in few hours. So a lot of that changes are, sort of affecting us in a very positive way. But I also see that in order for this change to continue, because I personally think what we have seen so far is only tip of the iceberg. In 5 years' time, finance will look very different on how we do things. But in order to get there, one of the biggest challenges which I see is getting and retaining right talent. And that is, very relevant for us because we as an organization, for example, we have, very large team, and you have a very interesting mix of people with a lot of experience, and people who are, who are sort of representing this younger generation. Blending them together to deliver and drive this change, I think one of the key challenges CFOs will have to grapple with and probably get through if this change has to continue and be meaningful for the organization. Thank you.
Okay, very relevant points there, Swayam. Let me come to you, Pawan sir, and I will slightly shift the gears while I want you to briefly talk about how are you preparing for next gen, but I also want you to add in terms of what are the critical skills that and the competencies are essential for the next gen CFOs, to succeed, and how should you develop that strategic mindset along with the financial acumen going ahead?
Yeah, thank you, Amol, and it is a pleasure to be here this morning. See, I think few critical skills which the next gen CFOs I would like to see is that, first of all, how can they anticipate the future, and especially the disruptions. Disruptions maybe in the technology side, disruptions in the businesses, the business models are getting changed. So the next gen CFO will have to probably develop skill around predicting or anticipating the future, especially from the disruptions point of view. How can they do that? And then plan to, mitigate or to work in such disruptive environment. The second skill I would like to, elaborate is on the skill to collaborate and influence the different stakeholders within your business teams. How can you, understand the other teams with your data, with the, complete analysis, what decision will have what impact on the financial outcome. So that ability to collaborate and influence will be, I think, another critical skill for the next gen CFOs.
Okay, sure. Partnerships, collaborations, valid points, Pawan sir. Vikas, let me come to you, and slightly again shift my gears and change another question to you. So the whole economic realities have changed, even some time back, even Swayam gave an example of GST, right? The whole taxation process have changed. Vendor management, supply chain has been changed. So if you look at the current structure, how are you making strategic planning for the future and making your organizations very, very competitive?
Am I audible at the back? Yeah, hi.
Yes.
So I think, first of all, of course, the macro environment is changing very fast. In this situation, I think, and I think somewhere in Shiv's presentation also, he emphasized this risk management part of it, which was featuring in the expectation from the CEO and the CHRO, right? So risk management is going to be extremely, extremely critical, and that is what I'm seeing in our business also, right? So preparing the organization for future, I think somewhere it is the CFO's responsibility, it is the finance responsibility to create a very risk-aware culture, right? Somewhere I really like the phrase when he said a balancer between cost and growth, right? So while you will allow the growth, you will not stifle the business, but at the same time, there has to be a good balance. So the risk management is extremely important. The second part is, I think we have learned from the pandemic. Somewhere, I think finance also needs to take ownership, CFO needs to take ownership of the BCP, right? I mean, stress testing some of the critical processes, making sure that there are right level of capital allocations to cyber security, data privacy, various technologies that are required for risk management, etc. I think that is super critical. And the third big piece, which I don't think anyone can underemphasize here, is the people part. We already have enough talent in most of our teams. How do we nurture them, enable adequate learning and development, budgets to be made available so that those can be invested in the right training and upskilling the existing team? And how do we make sure that all the new intakes that we have are basically coming with that strategic mindset and not just a very functional view of things? So that's my take.
Sure, very, very meaningful. In fact, one of the CFO had told me once that, while we talk about the talent, everyone wants a ready-made talent. Nobody wants to spend time on teaching them, inculcating them, right? And or the fresh graduates. So I think the internship kind of programs which the government has announced will really help. But thanks for adding that. So Raman, let me come to you. I think tech has become, the part of, the discussion of all the speakers apart from the talent and, other aspects. So if you could tell us, what will enable CFOs in leveraging technologies for the streamlining financial decisions, operations, enhance their decision making, if you could add on that?
No, thank you so much, and thanks for having us here. It's a fantastic theme of next gen CFO, office. I'll pick some of the snippets from what my co-panelists said. For example, Swam mentioned about efficiency in furnace operations. Pick any part of the industry, pick any part of the function. For example, renewable energy, we have seen data and the tech, AI, ML, data, adding 3 to 4% of yield improvement, bottom line improvement, significant. 3% bottom line improvement is huge, in any part of the world, and that's all driven by data. You look at processes in finance across any enterprise. If you do a good tech integrated, process like a shared service centers, there are 30 to 40% of efficiencies that kick in. So either you pick a horizontal as a function or a finance function or a business function or a vertical. We have seen data making and the technology making a huge impact on the business results. Now while that is one reality, that the IBM Institute of Business Value, we did a research on a CFO report, and it's a known, one very important finding is that 64% of CEOs firmly believe that the whole tech is going to make a significant difference, but the challenge is not in the tech itself. The challenge is in the tech adoption. And the tech adoption is where, the whole issue comes. So if you really pick that thread, and then what Pawan was mentioning, I think, and we believe that, CFOs are today sitting at a very sweet spot of being an orchestrator. Can they really orchestrate? Can they really be the choreographer of integrating, bringing the different parts of the organization into one synergic move on tech adoption and understanding the value that the tech will bring. So the whole concept of, see, because all of these initiatives need money. And typically any CFO or any enterprise, kind of debates around ROI. Is there a short-term ROI or is there a long-term gain? Is it a hygiene or is it a business model innovation? There are multiple debates that happen on that. I think CFOs are placed in the best spot to have an alliance with the tech internally and be the choreographer bringing the larger organization together and move in a very strategic direction. That is a fundamental shift, or that is a fundamental strategic move that we see technology and digital solutions enabling the CFOs in driving the changes in the internally.
Okay, sure. Thanks for adding that, Raman. So, Vikas, let me come to you and build on what Raman spoke specifically on the technology. The budget of technology is absolutely going up, and perhaps OpEx will have a lot of money going only for technology. In fact, recently a banker told me that 10% of his operation cost is specifically on the technology. How's the board looking at it? Is it tough for the CFOs to get approvals on the technologies? Where are you spending? Because ultimately when we speak specifically about next gen, you will have to spend a lot of money there.
Yeah, see, it's a challenge. I mean, obviously there is a finite sort of resource that is available, right? And obviously the first preference when we discuss capital allocation, the first preference always goes towards the growth, right? You will not compromise growth. And hence it's a very, very fine balancing act, right? I mean, how do you, and that is where the CFO skills come in, that's where the finance skills come in, right? So somewhere our endeavor and whatever transformation projects that we undertake, we basically, and usually what I've seen, again, from my experiences, they pay back very fast, right? So in many cases, because the payback is very fast, sometimes 2 years, sometimes even less than 1 year, they are self-funding, really. We don't really need to worry too much about how we are going to fund that investment, right? So that is the case. Otherwise, if there are some really large projects which require funding, usually they are not really lump sum investments at a point in time. They are usually staggered. There are various mechanisms available whereby you can fund those investments. But I would not try to sort of compromise on, where we can take the business through technology, because in the end, and we were talking about economy some time back, in the end, the way we see economy developing or the way business is developing is broadly, there are many other things, but broadly 3 things, right? They are focusing on digital, they are focusing on online, they are focusing on speed, right? Now, in some way or the other, we need to address these 3 in the business. And that's how you keep the business competitive, and, that's my take.
Yeah, sure, that was very meaningful. Upma, I have a very interesting question, because in my conversation with the CFOs, what I have been learning is, the KPI or the KRA of the CFO has been increasing, and it's been almost, doubled in last couple of years. Balance sheet se leke bhi digital and everything. आपकी salary भी double हो गई है?
Interesting question. I'll better not to talk about that particular thing in this forum, but yeah. I think the point what you actually touch upon is what is expected from a CFO. Like we spoke about, we are supposed to be the guardian, we'll continue to remain guardian. Now they'll say, fine, that's expected from you. What is next? You need to be strategist. That means you should come wear a hat whereby you are as good as your CEO. That means you have a full knowledge about the business, you are participating in the business discussion and using your financial acumen. So effectively for the CFOs, the expectation is while you are doing your job, but you're being, you're being skilled throughout your previous years or in your education, you're very good. But now the shift has changed. Start understanding the business and try to be the partner. The moment business partnering, you'll say the chief future officers, that means you are as good as a CEO. And it is not just stopping onto the business understanding. You should understand the risk. While you will have your risk teams, you should be in a position to talk about the early signs and what exactly is happening onto the risk side and what action needs to be taken, making sure that the organization is prepared for the future and we are not going to have any surprises as we are going into the uncertainties and the, the new world, what we'll call. Then comes the whole set of regulations. While you will be supported by the regulation, you should also expect it to know broader contours of all the regulations, making sure, be it on the tech side, be it onto the company's X side, everything you are ensuring that the things are happening. So here now the expectation is, which is I'll say it's a very positive way of looking at the CFOs. Earlier people used to say that CFO is supporting the CEO from the finance or from the financial numbers perspective. But now is actually that CFOs have entered into the co-pilot seat. And very soon we will see a lot of CFOs taking up the CEO's role. So in a way, it's a transition whereby a lot of CFOs will move into
Yeah, absolutely.
the
So in fact, I wanted to come to that apart from the salary one, but and we have seen that many CFOs have become the CEOs. In fact, that is the first choice of the board. By any chance, if something goes wrong with the CEO or he leaves abruptly, how are you, or how do you see your colleagues, specifically in the CFO fraternity, are preparing, to become a CEO or maybe become a next-gen CFO?
So, there are two ways of looking into it. First thing is how you yourself are preparing yourself to be ready to move it into the CEO's role. It's all depends on to the individuals. It's not that every CFOs will be, moving into the CEO's role. How agile you are and spending more time with the businesses, understanding the businesses and providing a very strategic, you can say, your thoughts, and also contributing when the discussions are happening. Parallelly, you're also accepting or embracing the setbacks. Everything is not so rosy that when you are taking some calls, maybe 95% calls will be fine, but 5% will go wrong. Stand up, accept your failure, and then learn from the failure. That's something, I think it's more of a continuous learning. And if our thought process is what next, like while we are very good in our own function, let's learn for the new function or the new role, prepare yourself for the new role. And the moment you have the confidence and you're prepared for the new role, people will just pick you up for the new role.
Absolutely. Absolutely. So Pawan sir, let me come to you. In fact, sometime back when we were exchanging notes and we were discussing the things are automating, what would be the role that the CFOs will play? Because as automation is increasing, couple of things or maybe typical rudimentary processes are becoming automated, right? So what will be the major role that CFOs will play going ahead, if you see that? Because the basic hygienes will be automated.
Yeah, I think the all standard finance processes, I think, will get automated and will need very little human intervention. So in that situation, the CFO would be, I think, a thinker and like co-CEO kind of role, where he can provide the strategic insights in different aspects of the business. Because the CFO is, I think, one role where the role gets to understand the complete gamut of the business processes, different processes, because of everything boils down to the financial numbers, and that is how the outcome gets presented. So I think with that kind of situation where all standard processes are automated, you don't need to devote time, except you have to keep on updating your technology, embrace new technological developments, etc. The role probably will shift more towards the thinker part of it, and the strategic insight provider to the CEO, and like become a co-CEO.
Okay. Noted your points, Pawan sir. Swayam, when we look at a lot of companies, in India, old companies, those who are, generating a lot of profit, are very old companies, traditional companies. But the evolution of digital is so high. How you as a CFO convince your boards perhaps, to go digital? How do you actually convince the traditional mindset of the people, maybe the owners, the founders, that we have to do this? And how do you convince yourself first? Do you use ChatGPT? Do you use AI tools? How do you actually convince them?
So before I answer that, can I give a different perspective to his last answer? I think what is happening today, the role which Pawan explained of, being a strategy driver, somebody who sees risk, be part of business, has always existed. But what is happening that CFOs have a lot of other things to do, which are not efficient. They spend time, in, for example, fixing KPIs. Yeah, month end mein achanak, predicted results and actual results look different. So there is firefight or fund management or some other firefight. I think what will happen with time is many of this will go away. That would create more time to do what Pawan just explained. And I'm sure, CFOs are gearing for it because they would be seen as somebody who is co-piloting, co-running business, giving insights and opinion about, key topics which is relevant for business. Now coming to your topic around how do I convince board, I have historically always followed a mental ROI model. And with time, last 15 years, I have learned that the first and brightest technology might not be the best to adopt. If you combine the two, and when I say ROI model, I think everywhere you have to put money, you should be able to calculate a financial ROI or an induced ROI. As long as this is clear, for example, a lot of people tell me that, look, this is an environmental, compliance. How can there be an ROI? There is an ROI because the cost of not doing that will translate into a loss, which would then become your ROI. So this has been, as capital allocation was touched, we are very clear that a core ROI model for most of the opportunity of change, first understanding where all changes are needed. And the driver for finance a number of times is cost because, for example, if you look at shared services or a traditional FP&A or accounting organization, you do have, a very large fixed cost, and that's a reality. The other driver is risk. Third driver is compliance. Fourth driver is essentially preventing errors which could translate into financial loss. For example, making 2 payments to vendor. Now, if you just look at all of them, there is a return if you are able to deploy a solution right. So the way I've been doing this, in traditional companies, non-traditional companies is very simple. When you explain ROI right, when you explain value right, and when you explain them with right level of conviction that you will be able to execute it, you will generally get a sign off. But in the end, it also boils down to capital allocation, and I completely agree. A project which seemed to have an payback of 2 years or less than 2 years, obviously becomes the most logical one to pick. But the other factor other than the financial modeling is organization ready for that change? Because so often than not, I have seen very exciting big bang projects getting announced, and day one board presentation will say how will this change our world, and then either during implementation or post implementation it just gets fizzled out, and after 5 years another one starts. So it's really organization's ability, readiness for change, your conviction to execute it right and drive change, and ROI, and telling this right to the board.
Okay, very, very well said, Swayam. There's this famous quote that if somebody is talking and he uses a word called ROI at least 3-4 times in his speech, ensure 100% that he is a CFO. So not just ROI, but returns. So thanks for adding that. So friends, I also want to take your questions. I have some time. So be ready with your specific questions. I will shoot my next question to Raman and come back to you. Be very, very specific. So Raman, I want to ask you specifically about data analytics and AI. I mean, when the whole world talks about AI, I just wanted to know whether ChatGPT will generate a revenue. Because it will show you how to work seamlessly. But the question to you is how AI automation and data analytics continue to reshape the finance function, and how are next-gen CFOs leveraging these technologies to enhance decision making?
Yeah, I think this is very exciting, and it has been touched upon in bits and pieces by pretty much everybody in the discussion. We have done some future crystal ball gazing workshops with our leading CFOs in the country. And when we showed to them the art of possible that technology can do today, one of the CFO, who is a very, very senior CFO in a pharma industry, actually said that, what will I do after this? In a casual manner. The whole message was that tech can possibly do everything because generative AI can create a narrative-induced month-end report from all perspectives. So you don't have to just create narratives also that, okay, why my sales is going down, why the EBITDA is under challenge, why competition is doing better. It can actually create narratives also. So you have to just maybe go through it, do some changes, and your report is ready. That is number one. So a lot of automation, a lot of efficiencies in the finance function, which means two things. One, it frees up your bandwidth as a larger team to do much, which enables you to take the growth with maybe not having more capital to it. That is one very easy thing, which is the low-hanging fruit. But the more important thing is that from a CFO perspective, the generative AI kind of a solutions and a lot of other solutions can actually help you do, which is touching on the risk part also, which was spoken about. See, businesses today are very, very volatile. The whole economic trends are very volatile. Whether it is COVID or whether it is a war that is happening, in different parts of the world, has impact on your supply chains, has impact on your sustainability, has impact on your business continuity plans and resilience. So the CFOs have now the possibility of saying, the role of a modeler, the role of a simulator, the role of a forecaster that, okay, if the board says that, okay, what if this war continues for 6 more months? Okay, you say that, okay, the war continues for 6 more months, system can tell you immediately what is the impact on your supply chain, where are the potential risks, what could be your future cash flow challenges. Now that means what? That means that is possible today, as art of possible. But that needs a very, very tightly thought through and integrated data strategy behind the scenes. That means the organization should have a culture of that data first mindset. And then on that point of data sources, you talked about IoTs and sensors and all. The art of possible on data capture at source, it is humongous today. So enterprise data on one side, the trust on data, which is integrated with that. Trust is extremely, extremely important in the technology world. Because the biases, the hallucinations you don't take decisions on the basis of system-driven insight unless you trust them blindly, literally, right? So data, trust, and one has to start thinking outside of enterprise data, and that's where the fun lies actually. So outside of my enterprise, so much of data which is there in the ecosystem, how can I really bring it all together? And that is where a third thing comes, which Upma was talking about and you were touching upon, is the whole shift of KPIs and KRAs. We believe that that era is gone when we go and talk to finance office, and most of the finance offices, I'm saying most, maybe the group here would be a little different, but when I go and ask a simple question that, okay, you have been creating these 50 reports every month, and why do you want these 50 reports? Even today also the answer most of the times is that, well, we have been doing it for long. It goes to the CEO desk, it goes to maybe some other CXO desk, so and I also see it myself, we got to do it. Then you ask second question, okay, do you go through 50 reports as a CFO? No, you don't. Right, so there is a fundamental shift happening on metrics that matter. Can I change my data-driven insight culture, my KPI culture, my KRA culture, my reporting culture to focus and redesign it completely to focus on metrics that matter? Metrics that matter for CEO, for CFO, for CPO, for CHRO, for COO, CMO, so on and so forth, and just focus on that. So that is a big fundamental shift which we are seeing happening. We have been doing those workshops with a lot of people, and the response has been very, very good. As I said, the fun and the challenge both lies in data integrity at the back end. Devil lies in details. So you have to really become the CFO has to become a data custodian. If I use that word again, CFOs will have to drive a very, very tightly data strategy across the enterprise. Not only finance, but production, manufacturing, sales, everything. So data integrity, data strategies is at the heart of it. And we say that make data the oxygen of your AI strategy. Then you will succeed. Otherwise, your AI strategy will probably fail, if I put that. So that's how things have evolved, and that's how we are seeing a dramatic shift happening in the finance organization. And that's how we have seen, to sum it up, CFOs moving away from the role of accounting, bookkeeping, reporting, board insight, and investor analyst meetings and the Wall Street meetings to a much more risk, resilience, and the business model innovator, if I call it. Because on your question whether generative AI or whether these technologies will create revenue, yes, I give an example of renewable energy. 3 to 4%, it's revenue, it's bottom line. Not only revenue, it's full bottom line. You think about that. And it is true in many industries. So the CFO's role, with the right orchestration and choreography of these technologies with the larger organization can definitely generate incremental revenue, more positive EBITDA, and most importantly, to my last point, help think of disrupting innovative business models. And that is where the heart, that is where the crux lies.
I noted your points, and I think on your data strategy, nobody will disagree, but there is one point which I strongly disagree is everyone should report, specifically the Economic Times CFO reports, everyone should read. When you say that, nobody's reading reports, I think everyone should read reports at least written by Economic Times and not the...
No, I agree. Everybody wants insightful reports. So Economic Times reports are always insightful. Yeah. So
don't
all
listen
means.
to this dangerous man there, specifically when it comes to reports. But yeah, noted your points. Thanks for adding that, Raman. And let me come to you. I also want your participation here. So anybody has any quick question? Yes, can you have a mic here on the first table? Can we have a mic?
While everything looks so sweet that it's so easy to do digital transformation, I'm sure it is not that easy. But any specific change management challenges you guys have faced during this journey within your team, within the finance team, or across the organization while doing the digital transformation?
Okay. Vikas, you want to take that? He's speaking about any experience that you want to share specifically on the change management side.
So before Vikas, you answer this, I'll give a very, very specific real life instance that I experienced. This is of course little old, aged. The organization for which I was working at that time was going through a fundamental shift on tech adoption, right? Now, in finance function at that time, let's say there's a team of 50 people sitting on a floor. Out of those 50 people, 30 machines got changed, right? I'm saying this is old, right? But the concept of change remains the same. 30 machines got replaced with the new fast processing, higher end machines. 20 machines didn't change, right? The 20 people sitting there in finance had a constant depression, ki mera kya hoga? Does it mean that I'm not safe anymore? Does it mean, why I'm picking up this very specific, on the ground example to convey a message that change is always difficult. And the way to handle change is the upfront communication strategy. There is only one thing that if you handle it right, it will handle all the change. And that one question is, what's in it for me? If everybody in the value chain understands that what's in it for me, whether I'm a CEO or I'm a data entry operator, entire value chain, if they understand what's in it for me, they will adopt the change happily, willingly, and they will be forward on that. So I think, but I just want to put across on that. So just remember what's in it for me. If you answer that for everybody through communication strategies, through training plans, through multiple things, it makes life much easier. Yes, sorry.
So I think, again, I think very similar. I'll probably share one example. When I joined Indus Towers, it is an infrastructure company. It is a very capital-intensive company. So every year there's a lot of capex that gets spent. And my sort of first experience was there wasn't enough sensitivity around capex spends, efficiency of capex spends, right? So obviously the capex governance, the capex processes required a lot of change and a lot of mindset change, right? So that is where the buy-in comes in. I think while at an overall level, I mean, there are a lot of details involved, but at an overall level, I think broadly, you need to make sure that everyone has that buy-in. They are convinced, they see the value in that change, right? That is very important. If they don't see the value, they will never agree. Two, there has to be right level of investment, both resources, money, to basically enable that change. So if you are the change catalyst, if you are the change driver, you need to enable that change. So that's number two. Third, I think is the biggest piece in my view, right? Communication plays a very, very important role in change, and sometimes for driving change, you need to over-communicate. You need to keep talking about it. You know, it won't happen first time, second time, but you need to keep talking about it, and one day you will see that change, that mindset change happening. I think these are the three big things in mind.
Sure. Can we have one more question? Is there any other question? Sure. Can we have a mic there, please?
Very insightful. Thanks for sharing all of your insights. My question is, as a CFO, how can we foster a culture of a digital mindset within our teams? Because, interestingly, if you go back to a team and you say that something needs to be automated or something needs to be moved, the first thing comes is the incremental work, right? So we need to continue the existing. And also then, as the change happens, we need to be there managing that change, and both things parallelly works together. So always there is a pressure or something or a pushback coming from our teams that, this digital mindset, will it really help us? So how do we, my question is, what can we do to foster that mindset in the team?
Upma, do you want to take that? If you remember, even Swayam partly touched that topic when I asked him about the board of directors some time back. Upma, please go ahead.
Yeah. So, one of the things for building the confidence within the team when the whole digital transformation is going on, you really have to lead from the front. First thing is you need to be convinced. You are showing your teams the real benefits. How will you show? I mean, we'll keep talking about, this is an automation. One thing what I'm seeing is we are dealing with human beings. The internal fear is what's going to happen to us. Nobody's talking about their role. I mean, they are having a fear. My role is going to become redundant. So that's how, to a greater extent, resistance is there. One of the things what I have done it, I'm just sharing my personal experience. Whenever there is a change management or, you're trying to automate certain things, trying to explain to the team the benefits, you start in phases. You do a small part of it, involve your teams into the business discussions. So one of the things what they're so much into their own routine data work, they have no idea what's happening onto the business side, and use the same data, how the business is getting impacted onto the positive side. The moment they'll get a larger picture of, hey, with this data, this is how my business decision is actually getting changed. You will see the complete perspective gets changed, and they will become the front runner of having these changes which is required across the teams. One thing I just wanted to touch upon, we talk about digitizations and all, and the large projects, and I think this one talks about we invest into the projects, then it's become like a buzz thing. After a few years, we are actually phasing it out, those investments, and we're just taking it hit through the P&L. What exactly is important is whenever there is a transformation projects going on, I think that's a time when we need to spend a lot of time to understand or demonstrate or explain to the business partners what exactly is expected. Now, if you go to the organization, you'll say, hey, you're the catalyst. I would like to see branch profitability. But and there is a lot of transformation has happened, but the right data is not flowing from the system. The basic thing is how we are storing the data. We need to spend a lot of time on making sure that all the nitty-gritties, what we are thinking today or in future, that gets captured. Without capturing the data at the right place, you will get the reports which will not be the insightful reports or the meaningful reports. The first thing in any transformation is how much we are spending, and that's spending time understanding our own requirements, making sure we are not prepare ourselves for current but for the future, and doing the cross-functional discussions. It's not that just the finance, you won't know what the business, but anything when you are touching your customer, your business, everything should get captured. Today, those fields may not be that useful, but in future that becomes useful. So that's something we need to have, that mindset of leading the transformation and just moving out of our comfort zone, and the teams will follow you. That's what I can say.
Okay, sure. So, Pawan sir, let me bring you back here, and one important question now. We spoke about the importance of next gen, the decision making, the change, and everything. If you could tell us what could go wrong, because being a CFO, you must have taken hundreds of decisions, and now when we don't know how the next gen will pan out, how the digital will pan out, how the outcome will be. What is that one or two metric that you are going to follow so that you will not fail? If you could share that.
So I think, first of all, as CFO or as a finance functionary, we have to be thoroughly prepared, I think. So it requires a lot of preparation for any, especially any strategic decision or any investment decision, for example, in the technology side or anywhere where you want to do that. The preparation is, I think, one basic thing. And the second, I would say, is that involvement or buy-in by all the stakeholders. I think we have to also ensure that how do we bring all the people at the same thinking level who will be key to the success of any of such projects. So I think these are two things which we should focus on to ensure that we are successful in these projects, and the failure is the kind of can be avoided.
Sure, I think that was very meaningful, sir. Swayam, I want you to add on the same. What should CFOs avoid, and what would be the biggest challenge? We partly discussed the pain point, but according to you, what would be the biggest challenge for a CFO in next gen era?
Okay, I'll answer partly this.
Sure.
And this, next gen transformation is very close to my heart personally. So let me still answer it. About a year and a half back, we looked at all JSW Steel digital transformation projects, the projects which did not go as planned. Very high level, I think there was a question which was asked. 10% of the projects which failed was because the solution was just wrong. I mean, the design solution was basically kahin aur. 30% of the solutions which failed was because when you do business requirement gathering, when you scope the project out, you did not think through, and that project went through multiple rounds of UATs and then it got fizzled out. But what was the most surprising thing for me is, of course, you have 10 to 20% projects failed because you did not have right organization, right stakeholder buy-in. But 30 to 35% of project failed because in the solution design, you did not think about the user. You did not think that the guy who might be doing it manually, suddenly you are asking him to look at 3 screens to execute same task. And you still allowed his manual way of working to stay. And that silently got fizzled out. I say this because, change management is a very large topic for all of us. And the first day always sounds very, very exciting, duniya badal jayegi kal se. I think in India, there was reading a McKinsey data which says only 30% of digital transformation projects actually end up delivering the IRR. And so now coming to, so the question was the biggest challenge for CFO?
Yes.
You've asked the most difficult one with me.
That's why I kept it last.
No, it's really managing the change. And could be, the technology which we talked about, but could also be disruption, could also be expectation, different expectation from stakeholders like board, shareholders in terms of, what you are expected to give them as assurance, as, for example, delivery plans. It's really managing the change. And, personally, if I just narrow it down to finance, it's going to be, 5 to 10 years from now, a company, a finance function in a large company differentiating with similar finance function in another large company would really be CFO's ability to see through, lead team, and deliver the change which is needed. So I can give you a very long answer to this, but let me leave it here.
Sure, I think that was too good, and the time is already up. I wanted to take more questions, but we are already always short of time, and there is more time to discuss. That always challenge is there, but thank you so much for sharing those meaningful, relevant, and realistic thoughts. I think we have learned a lot, copied a lot. You will see it also translating on the website, so please stay tuned. We'll be noting it in the stories as well. But thank you so much for being part of NextGen on the ET CFO platform and being part of this summit. And thank you so much for listening to us very, very patiently. Thank you.